futures are up this afternoon on Sunday. Some of that might be due to the news about Tesla, where there's a settlement between the company, Elon Musk, and the SEC. The stock got plastered on Friday on huge volume. I'm going to use MarketSmith here for a little change of pace, but you can see we got blasted here on very heavy volume. And as I wrote in the report, which was submitted for posting before the news hit, you wanted to keep an eye on the lows in the pattern, because my view is that there would be some sort of resolution that might trigger a rally, and that the whole thing could turn out to be positive for the company, and that you get this quasi nut job genius out of the way and get somebody in there who actually knows how to run an auto manufacturing operation. I think that's really what Tesla needs right now. And if you had that, given the amount of short sale interest in the stock, as well as the fact that you might have a bunch more shorts that have piled onto the stock now that they've, it's confirmed in their minds that Tesla is cooked. As you know, I don't really look at it that way. To me, it's just a trading vehicle, and I always take into account the fact that the shorts may pile into this thing, and as a result, put a floor in it and turn it back to the upside on a short squeeze if the stock refuses to die. And as I've noted many times, what doesn't kill the stock often seems to just make it stronger. So we'll see what happens tomorrow. I'm just not sure if the futures are up because of that. I noticed the Nasdaq's futures up 23, S&P up 5.75. So the Nasdaq's up a lot more on a percentage basis, and it might be due to that. So we'll see what happens tomorrow morning. But I just want to go through some ideas that I've been looking at over the weekend, and we'll see whether some of these work out tomorrow. But let's take a quick look at these. Acacia, I think I covered in the report, and that's actually on my actionable list for tomorrow as it pulls in on this breakout. You can see that you're sort of setting up in this bottoming cup with handle. Now, in the days of the Japanese trading rice, that's where the cup with handle or frying pan with handle formation was widely used, and it was used as a bottoming formation. So here we have this situation where you have something that looks a little bit like a frying pan with handle in here, and you've got some level of resistance along this just above the 40 price level, and this may, it could potentially turn around. The company is a turnaround next year, so you got a $1.31 estimated, 147% increase for 2019, so it is a turnaround situation, okay, and that could drive it higher. I sort of like this breakout, and I have been talking about the stock in recent reports. Now, Dow stocks have been doing well. In my last video report, I think it was last Tuesday, I talked about Disney, and here's a weekly chart of Disney. It's breaking out of a cup with handle formation, but also a choppy range, and pretty nice volume in there. But what I think is fascinating is that in this market, you see these big stocks rally, and the fundamentals are just not that great. 18% earnings growth, 7% sales growth. Hard to get excited about that, but the bottom line is most everything in this market runs on technicals, and the technicals are often not traditional technicals, a lot of undercut and rally type moves and whatnot. So, it's not your grandfather's bull market. Anyways, Boeing is breaking out of formation here. If you look at this on a weekly chart, you can see that this thing is coming out of a very long base, and it's trying to break out. So you had some reasonable volume last week coming out. Earnings are not too bad, 34% in the most recent quarter, and you got 68.94, and this is after a big run. So it's spent a while consolidating, which is constructive, I think, and this could turn out going higher. It's interesting that Boeing was considered to be a potential victim of tariff war, and it's just sort of ignoring it. Well, it's not sort of ignoring it, it's actually ignoring it, and it's continuing higher. Caterpillar is another one of these, and it's trying to come out of the lows of the base, or up the right side of a new base, you might say. And you actually had a couple of pocket pivots, one here, and then another one here at the 50-day. So one coming up off the 10-day and the 20-day, which were just above the 200. Now you're pulling back into the 50-day. And I'm sorry, you're pulling back into the 200-day. I get these mixed up. This is a black one, and it's the 200-day, and the red one is the 50-day. You'll notice on my HGSI investor, HGS investor charts, I use a red 200 DMA and a blue 50 DMA. Here on MarketSmith, you have a black one for 50 and a red one for 200, so it throws me off from time to time. So you'll have to Pardon my confusion on that. Anyways, do have the pullback here, pickup in volume. So I'd watch this maybe coming in. I think earnings are due out later this month, so that could be an issue perhaps. Now, we had earnings come out for BlackBerry on Friday, and a few people emailed me about this one. And one thing I noticed about BlackBerry is that it's had 1, 2, 3 waves to the downside, and now you sort of leveled off in here just above 10, and you had a big gap up move on Friday. Now the stock tends to be very volatile. You'll notice if you look at the pattern back here, you have a big move up and it comes back in, another big move up and it comes back in, and that's been pretty much the story with this stock the whole way. But it is another turnaround situation with 18 cents in earnings expected for 2020, and you're going to start turning around, I guess, maybe sooner than later. But that's a big gap up. Now the question here is whether you're going to be able to buy this thing or whether there's any coherent way to buy it. Because what I noticed, it did close just above the 200-day moving average on Friday on very heavy volume. But these are the fundamentals: negative 20% earnings growth, negative 12% sales growth. So that's not growth at all. That's contraction. So, but you held above the 200-day line, although towards the close I saw it trade down into the 11.20s, $11.20 range, somewhere in there, and then it rallied back to the upside to close at 11.38, just above the 200-day moving average. And I don't know if that's playable or not, but I think one thing you might watch for is a pullback back to the 11, closer to 11. I mean, it's not that far right now, but I would look for it to hold tight along the 200-day if, in fact, this is going to work. It's a little bit of an offbeat idea. So now, some of you might remember this one. Look, BLFS, BioLife Solutions. I remember a friend emailing me and telling me that he was buying this one here because, of course, it's a high tide flag, right? And because it's a high tide flag, it has a God-given right to magically go all the way up to the top of my screen here in an instant because it's a high tide flag, right? And but as we know, all that's baloney. So this one failed. And you know what I'd like to see, instead of having 5 examples of a high tide flag that worked, show me all of the examples of high tide flags or this alleged formation that's called a high tide flag, and show me how many actually work. So I do remember when I was at O'Neill, we started doing a project in pattern recognition, and they do employ some of that on MarketSmith. But I recall what we discovered is that you can have a computer using an algorithm can recognize a cup with handle formation. But what we found out is that the computer recognized a lot of cup with handle formations, and the vast majority did not work. So a cup with handle formation in and of itself does not mean anything in terms of predictive value. There's so many other contextual factors that come into play. And my guess is the high tide flag is the same thing. So, you know, that said, this one failed, no surprise. And you undercut the 1688 low here and rallied back above it here. So you're setting up this sort of undercut and rally move in this thing. And this might be something to look at if you're into small, thinly traded, that's 334,000 shares a day. It trades thinly traded biotechs. But, you know, you can forget about the high tide flag, and you can look at it more as an ugly duckling setup down here. So an interesting thing if you're looking for something like this. Now, how about pot stocks? You know, I call these Bitcoin 2.0 because of the tremendous moves that these things have had and the speculative fever that suddenly enveloped them. But what you see here is a big sort of flag formation. Now, I'm not going to buy this thing up here, I don't think. It's pulling into the 20-day, yes, I see that. And volume is declining, minus 21%. That's not dry enough for me. But this is what I would watch for. And I would be more opportunistic with this sort of thing because it is crazy, and this is only for people who are equally crazy trying to trade something like this. But this is what I would watch for. You have a 40.68 low, I believe that is right there. Look for some sort of undercut of that low and then a rally back up through it. And that might set up a trade if you're into trying to trade these things. Now we can look at another one, Kronos, C-R-O-N. And this one was a little less nutty. It's not like Tilray, which had a crazy move and a climactic top, and I don't know if I'd want to get involved with that. I don't really care to trade stocks that get halted every 10 minutes during the trading day. Maybe you do, but the suspense may cause a cardiac arrest for me, and I'm not really into that. But you can see that what you're doing here is you're trading down to this lower trend line. You're sort of in this like ascending pattern where you have a high here, you break down a new high here, and then a new high here. And I wouldn't call this an ascending base, but what you do have is a pullback into the 20-day line here with volume drying up to minus 48%. So that is a voodoo pullback. Now, if you trade down to the trend line, you're going to come a little closer to 10, but you're coming into a zone where you could try and test this out, looking for a pop to the upside. So something to think about. I'm just throwing out some odd ideas that you might find interesting. We'll get to some more basic things. I notice oils are moving, so I'm looking for some of the better oils. We can see that Continental Resource is going to have a 520% increase in earnings in 2018, so it's getting started on that here. Big sales are moving, and you're trying to break out of this space. I don't really care for this straight up move off the lows, so I'd like to see it sort of consolidate, but you might put that one on your buy watch list. There's also Occidental. I can remember Oxy way back when. That was considered the oil stock to own, and this is back in the early 1990s. But in any case, you have this thing flashing pocket pivots coming up through the 50-day moving average, and you have one here, even though it stalls a bit. And I believe that would be, no, I'm sorry, scratch that. That would be here, and it's at the 20-day line. So this one is a second one occurring in a position that's slightly extended from the 50-day moving average. So I'm not so sure I'd want to come after it. But I think some of these may be worth watching to see if they set up. What I find compelling here is the turnaround in the earnings, 458% increase to 497. And we can go back and look at, when this thing was trading, making 483 a share back in 2014, it reached a high of 101. So you may have some upside in here that takes you up a good, say, 20% or more. So possibility. Although you have to recognize that oil stocks carry some headline risk in that they're dependent sometimes on the price of oil and developments in the oil markets, whether there's going to be a shortage of supply or more supply or whatnot. And I think right now what's working in their favor perhaps is the ban on Iran and their inability to export oil. Anyways, moving along, I just thought I'd throw this one out here. I don't know if you guys remember me talking about this back in here when it was real tight, and this thing's launched higher. Now, what I find paradoxical about this is you don't have big estimates over here, 23%, 12%, but the last quarter's earnings up 15 and up 12, so that's the deceleration, but sales seem to be picking up from the prior quarter. But notice how it doesn't take much in the way of earnings growth to just drive this thing much higher, but it did work. I guess could have treated this as a viable gap up, and it's gone higher. So, but another name that's an ugly duckling set up along the lows after looking quite ugly on a breakdown off the peak, which was right here on heavy volume, and it just settled down, undercut some lows, and just turned around and took off again. Very typical for this market. Hologic, tomorrow morning, HOLX, Hologic, they make a mammogram machine called I believe it's the Genius 3D. And on Monday morning, tomorrow, the CEO is going to ring the bell, the NASDAQ bell, not the NYSE bell. And the stocks have been rallying, and I notice, earnings are not exciting, but the technical pattern looks interesting here. So if you're a technical trader, you might look at this as potentially viable along the 10-day line. HubSpot, this is one. I tweeted about this one. It's kind of a freebie for the people who follow me on Twitter. And this is a nice pocket pivot. You can go back and look, and I actually tweeted about that. The stock had a nice move higher. Notice, though, after the breakout, that it's gone up and then just come right back to the breakout point. Now you're hanging along the 20-day line. So there's always potential for this to fail. Or it could become viable, and here you're minus 45% below average on the volume on Friday, so it did dry up along the 20-day line. But you notice that this is another instance of where you have a pocket pivot in the lower part of the base, and the best move occurs after that. If you're coming in late on the breakout, then boom, you start making a little money, and then you give it all back. Wonderful. Not really my cup of tea, but that's very typical of breakouts in this market. I'm looking at Light, and they've been getting tagged. I think there was Applied Optoelectronics got tagged. Let me check that real quick. Yeah, they've been getting tagged on a downgrade, and their earnings are just terrible. This is one I thought was going to come back a while ago, but we got stopped out of that. And I think Light might be considered related to that, but it's sitting here along these lows near the 200-day moving average, and it has found support along there before, so I'm just kind of watching this. I'm just throwing it out there. I don't really think there's anything here to buy, but it might be worth watching, and then it might not be, but I would probably rank that as one of the lesser of the ideas I have here. Here we have Service Now, and this is hanging along the 20-day line and the 10-day line. Volume was minus 36% below average, but it was up on the day on Friday. Now notice again, you have a move off the lows of the pattern here, and that's a nice volume break, and it goes a little bit higher, and then it just breaks down, and it's not really going anywhere. You got earnings coming out at the end of October, so maybe it just sits here until earnings come out. Now, one thing that catches my eye are the fertilizers, and I've noticed Nutrient has been hanging in a base, and you've got big earnings growth, big earnings and sales growth in the last quarter, so sort of a turnaround here, and you're looking at $261 a share in 2018 for the year, 480% increase in earnings, and then $319 the year after in 2019, up 22%. So you're hanging in here trying to build a base, something of a double bottom. You can see the undercut and rally. So you can see that you undercut 54.30, you undercut it here at 53.81. That sets up the undercut and rally again. And that's setting up again, looking like it's going to break out. But I like it better on pullbacks towards the 20-day line. I like it even better if you were watching it here when you had the undercut and rally. But again, there's the undercut and rally setup, and it happens so often in this market. So unlike high tide flags, undercut and rally setups have literally hundreds of examples. So my statistical sample size of undercut and rally long setups is quite significant. It's not 10 over the last 120 years like there's with this ridiculous high tide flag. So anyways, let me continue. VMware is interesting, and this is another example of a breakout that fails, and it looks ugly, but notice how it undercuts the lows in here, right here, and proceeds to move back up and trying to break out again, but it's hanging along the 10-day line. Volume's drying up a little bit in here. You might watch this hanging along the line. It might become viable. Workday, I'm not sure if this is a short or a long, but again, here you have a situation where you just came off the 200-day line here, and you just proceeded higher in this relentless but very slow trudging uptrend, and then you break hard after earnings. So you get to watch, if you buy the breakout, you get to watch these slow gains come, and then you get to watch them disappear over the next couple of weeks. You get one bounce like that, another chance to sell, and then it breaks for the lows, below the lows actually, below 141.02, which in turn set up an undercut and rally. And now you're bouncing back above the 10-day and the 20-day, but not much velocity in the volume in here. And I don't know if this is going to roll over and break down, but I'm not really a buyer of this. I would have been a buyer of it on the undercut and rally, which has worked for a good trade, and we'll see where this goes. But it's very typical. You know, you see breakouts, and they don't really go very far, and that's kind of the way this market is. The best entries come on the undercut and rallies. Yelp is another one. If you recall, I talked about this one in my video report a few weeks ago when it was hanging along the lows in here. It looked kind of tight, and I was saying keep an eye on this. This looks like it may come off of here, and it did. You get a breakout here and another move higher, but notice how that doesn't result in any further upside thrust. It's now dropped below the 10-day line, and I would watch this for a retracement to the 20-day line. The reason for that is because if you eyeball this low and this and this high, then about the midpoint is a 20-day moving average. So you might pull into the 20-day line and bounce off of it. So I would consider Yelp to be a turnaround situation. You have 33% earnings growth on 12% sales growth in the last quarter. We're looking for declining earnings growth in 2018, but then a turnaround of 71% to 60 cents a share. So, and that would be the second highest annual earnings the stock or the company has ever posted. Anyway, something to keep an eye on. Zendesk is one I've liked before. I believe I was talking about this when it was down in here in older previous video reports. You can go back and check those. But here it is setting up again. It's a little bit off the 10-day and the 20-day, so I'd see if you got to pull back to the 10-day and the 20-day, but it's acting well. And then finally, Zuora is a very interesting IPO that had a nice big move, and all those IPOs started running back in the summer, and then of course it blew apart, and then you had a sort of a pod type setup, punch bowl of death. It's not really, it's sort of deep enough, but not really deep enough, but it's close enough, I suppose you call it a pod, punch bowl of death, and then it broke down. So, the short sale point on this, however, is at the 20-day line, which is here. So from here to here, you wouldn't get a chance to short it near the 20-day line. You'd have to short it on the break where it breaks below the 50-day line and then continues lower. But what I notice here is that you are undercutting this 2250 low here and trying to rally. So if you like to try and play these, here's one that's setting up. So other than that, I don't see a huge amount of things that I want to be buying aggressively. And this has kind of been the consistent pattern where you do have some things edging higher, but most everything is edging higher within its pattern. So there's nothing in terms of big breakouts and upside thrusts and big trends beginning. It's still the same old choppy market, and we'll see how this thing develops as we proceed through the next week. But those are some of the things I'm looking at over the weekend, and I don't really find them to be terribly exciting, and I think that does tell me something about the market in general. So anyways, enjoy the rest of your weekend, you guys, and we'll catch you later. Take care.